Hey everyone, and welcome to another episode of This Week in Crypto Philanthropy, your guide to crypto-powered change. Nick Michalewski, Senior Sales Manager here at The Giving Block, and joined once again by my colleague, Pietro. Pietro, how's it going?
Doing well, Nick. Good to see you. I've missed a couple episodes here, but excited to be back in the rotation. And currently, hope everybody's staying warm. It is like 47 degrees this morning in Miami, so we're playing catch up to the rest of the United States. But no better time to talk about what we have on deck for today. So excited to be here.
Yeah, and with that, we're going to jump right into things. All right, we have a special guest, an internal guest today, David Johnson, who's Giving Block's General Counsel and Strategic Advisor here at The Giving Block. David, thanks for joining us.
Thanks for having me. Good to see you guys.
Yeah, so we're getting into the end of the year. There's a lot of giving ramping up. There are some tax rule changes coming down the pike. We thought it'd be a really good time to do everybody's favorite topic, crypto and taxes. But there's a few changes to note that does have an impact on what people might be considering giving and how giving is going to change. For the rest of 2025 and then what's coming down the pike in 2026. So we've been hearing this on a lot of conversations on the nonprofit side, and certainly, for those donors out there that might be considering making charitable distributions, there are some things just to know. David is one of the experts. We're really fortunate to have him. So we thought we'd take a little bit of time today to break things down so it's a little bit clearer. So I guess, maybe a good place to start, David, is just sometimes in our conversations, I get these very basic questions on like, hey, how is this stuff taxed? Is crypto taxed like currency? Is it property? What are some of the basics?
Yeah. So I guess first the usual disclaimers. I am a lawyer, but I'm not your lawyer. So I'm also not anyone's tax expert either. So follow up with your own advisors on those. But with that, I'll jump in. Yeah. So the crypto is a property. It's treated by the IRS like property. It can be donated. In fact, we'll get into some of why in a little bit, but it's actually encouraged. You're encouraged to donate crypto in a way by the tax law. But yeah, bottom line is property.
Yeah, I mean, same. So for everybody out there, it's the same reason why people are giving stock. And if you've been processing stock for a number of decades, this follows a similar type of setup. If you're putting assets into a DAF,
Yep.
you're using the same advantages in the tax code. So crypto shouldn't feel
Donating
like
a car, donating real estate, donating artwork. It's all treated the same as far as
Yep.
the IRS is concerned. Yep.
Okay.
Perfect.
Yeah, go ahead, Pedro.
No, I was going to say, I mean, this is kind of our standard bread and butter conversation that we have at the Giving Block all the time. So for us, it may be something that doesn't seem new because we've been in this space for a long time. But I think it's worth emphasizing, right? A lot of folks maybe are in their first crypto cycle or haven't had the opportunity to ride the bull market waves that we've kind of been the beneficiaries of the last 24 months. So obviously
Yep.
it's timely around the holidays, but I wanted to drill down a little more, David, with you, because I know you work with a lot of our folks kind of even as like a hand-to-hand white glove service in terms of educating and helping folks get across the line on these donations. Maybe just start with some folks who maybe have had their first attempt at crypto. They maybe have some appreciation. Like, can you tell us why there's advantages to donating appreciated assets versus say other things? Because we have a lot of folks who give. Maybe
Yep.
that's normally a cash contribution, but why don't we start there? I think it'd be super helpful.
So basically, I guess even before talking about the donation context, if you have an asset that's appreciated in value, you go to sell that, you have capital gains. So let's say Bitcoin is over 100,000 right now. Let's just use round numbers. Let's say I bought it at $10,000. It's gone up 10 times. That extra 90,000 worth, I would pay capital gains on. And so when I choose to donate that instead of selling it, I'm not going to pay any capital gains. So again, I bought it at 10,000. It's worth 100,000 now. I can donate $100,000 worth to a charity. I get a full deduction for the 100,000. I never pay that 90,000 capital gain, and the charity, of course, doesn't pay capital gain when they sell it and get the $100,000 proceeds.
Yeah. And, for those folks who are, gearing up for, giving across, the next, month or so as we get closer to the tax deadline, before we get into the changes that are coming down the pike, we've got some tools. But to that example that you just described of, I bought crypto at this stage, this is my entry point, I'm now looking at some appreciation. We've got some tools, that we, have here on the Giving Block. But can you walk through kind of like some of the calculators that we have and things like that? Because I think that'll be really helpful for people to see, where they can learn more about this stuff.
Yeah, you bet. We have in our knowledge base, we have a calculator that folks can use to kind of map out. It's really that scenario I just described. For example, at a given tax rate, I have a crypto that's appreciated up to a certain level, and if I were to sell that, in the case of that same Bitcoin example I just gave, how much would I be paying in capital gains? How much would I be saving in capital gains by donating it? And you presumably have a range of assets, including stock, crypto, a range of different cost bases on those. And so that's really what the calculator would help you do, is kind of figure out what should I be donating from a tax optimization perspective. And then we can get into this more later, but basically, how do I make sure I donate that in a way that's not liquidating it before it lands with the charity?
I want to follow that last point you made where you said like maybe not liquidating it before it gets to a charity or in the right sort of chain of custody.
Yep.
Not to emphasize like first time donors, but just I think thematically what Nick and I have talked about a lot on the podcast is like the institutionalization of crypto. It's becoming more mainstream and alongside a lot of other financial services and products. And so I think we're kind of getting into new populations of folks, of investors that are maybe already doing donations. But for some of those first timers who maybe they have a really good playbook for donating stocks or donating cash, like not to treat this like a living FAQ, but are there any pitfalls, misconceptions for first timers who are thinking about this? Or, like you said, a tip of not liquidating before you donate. Or is there anything there that you might harp on for folks maybe catching this the first time?
Yeah, I would say one of the things is, I guess I've already said it a couple of times, but just donate that most highly appreciated asset to get the most tax savings. You really want to go for that asset that's appreciated the most in this current year, whenever you're thinking about donating. So start there, work your way down to lesser appreciated assets in your donation planning. The other thing would be sometimes people attempt to effectively give their crypto or stock for that matter, but they think they could convert it and then give the cash. But the tax benefits we're talking about and avoiding capital gains require it to actually be donated in kind. So to use a car example, you can't sell your car, take the cash. You got to actually drive the car down and leave it on the property of the charity. Same thing with crypto. You need to make sure that the Bitcoin is actually received in a wallet held by the charity. That doesn't mean an employee of the charity says, "Oh, I've got a Coinbase account, just send it here. I'll liquidate it, cash it out, and send it." That also is not going to benefit you, help you avoid capital gains. So those are some of the key things. And then the other thing is, people don't always follow through to get the right receipting and reporting so that they can actually claim their deduction. So we if you use the Giving Block, this is all built in. There are tax compliant receipts, 82, 83, 82, 82 forms. We can help both charities and donors with all of that and getting appraisals. But if you don't follow those steps, you may be asking for a deduction, and the IRS is not willing to give it, or you're going to worst case scenario trigger an audit. Most people would be surprised to learn that you actually need to have all crypto donations over $5,000 appraised by a qualified appraiser. People tend to think they wouldn't be necessary because you could look at the price of Bitcoin today. I donated today. We all know what that's worth. But because the IRS treats it like property and there's no exception like there is for stock, you actually need to go through that step. That's another thing that the Giving Block can help with.
And maybe to build on that last section, there might be some nonprofits listening to this thinking like, okay, I see why we can't just tell, some of our supporters, hey, just liquidate it, send us the cash. Like that should be good enough, right? Because we're going to be unintending some pretty big tax bills for our donors, which may scare them off entirely or just cause some unnecessary friction. So for those nonprofit listeners out there that might say, okay, well, I hear you. We need to do all these things. Maybe this is more than we can handle. David, would probably be really helpful to maybe introduce how the team that you sort of also spearhead on the private donor services side that can at least make some
Yep.
of these pitfalls a little less scary to kind of tackle. So would love
Yeah.
to, let you talk about that too.
Yeah, I like to describe it like this, that the Giving Block really is a platform that already abstracts and makes all of this super easy. So when you think about doing crypto and you've heard about, say, private keys, you have to manage your keys, don't lose them or you lose your crypto. That's not something nonprofits have to deal with at all. We're abstracting all of that. Nonprofits will interact with our platform, interact with their crypto, um, as easy or easier than they interact with, say, a bank account, where it's all very intuitive. You're punching here to receive proceeds or whatever. Looking at your balances, for example. Also, crypto is being liquidated on arrival, so nonprofits are not dealing with trying to figure out how to sell Bitcoin in the middle of a weekend or something. It's liquidated and then sent out. So from the nonprofit perspective, a lot of that is really built into the platform and abstracted. For the donor as well, especially anyone who's at all familiar with crypto, they're going to go through our donation form and they're going to be presented with a way to transfer that feels very native and familiar with them. That said, so that's all kind of what the technology does and how it's already easy without any services on top of it. That said, we have a what we call our private donor services team that steps in, particularly if there's any very large donation, think $100,000 plus, although it's not a strict limit, and or any complex donations. So certain assets that maybe don't have as much liquidity, certain assets that are not already set up on our platform. We can provide the services to help find a way to liquidate those. Sometimes it's as simple as getting on a video call with a donor, sometimes with the charity as well, and just walking through the steps, ultimately using our form, but just making sure everybody's comfortable. Sending a test transaction after the donation, making an introduction to an appraiser, like we said, as one of the requirements. So it really is just another layer of white glove service on top of what is already a pretty simple to use platform.
Yeah, it's super helpful. I can't imagine interacting, like if you've been in crypto or if you've interacted with an app or anyone that's saying, hey, send crypto here. It's often daunting. You want to double check,
Yep.
triple check on all of it. You alluded to this already, which is that, private donor services works with folks who are working with, charitable contributions of potentially significant size. And I have to imagine there's a certain amount of education and maybe the notion of like building a plan or a strategy around this, especially if you're looking at some of these considerable tax advantages. So I was thinking, are there any particular considerations that you either advise or give a nod to when it comes to timing? I know we're in November. A lot of folks are typically thinking about giving at the end of the year, if it's November or
Yep.
December. Can you contextualize that and why maybe the end of year is a really important time to consider some of this versus maybe putting it off? I know there's some nuance between, tax day maybe next year, but also the fiscal year ending at the end of December here.
Yeah. Yeah. So, I mean, I guess the big thing is you want the tax deduction in the current year. Typically, people are looking to accelerate that. So that's a simple answer. We tend to do a lot of we process a lot of donations in November, December, and so that's the biggest thing. Just kind of get it in before calendar year is the way most people think. I would add to that: don't wait until December 31st. Particularly when there's larger gifts, particularly when there's some planning around, distributing across multiple, or in some cases setting up trusts or other things that make it more involved and have more stakeholders involved. We want to start that process earlier on. So if it's a simple donation sending the form, it can usually happen on the same day, but in many cases it can take days to put these plans together. So the earlier the better, and before end of year is the right answer. I would also add, given some recent tax changes, again, talk to your tax advisor, but we have heard from advisors that many folks are looking to front load and do a bunch of batching of donations in this year, getting multiple years in, whether that's sending it directly to a charity or setting up a DAF or other tax vehicle.
Yeah, and I guess, highlighting how 2025 seems like, it could be a year where we see some, increases in activity because of the new tax rules that will be going into effect. The fact that, crypto markets are still, elevated right now. It's not all bad news for, nonprofits and donors out there. I mean, for the younger, not younger, for the donors giving on some of those like smaller gifts, there's some rules that allow for some giving to happen where you don't need to worry about some of those itemized restrictions or rules. But for those larger donors, there's a new like AGI component. There's kind of like a new floor that's sort of set. So, giving has to reach a certain level before you can start to, take advantage of some of those deductions. So this is kind of like for lack of a better term, I guess, like the last like full deduction year before some new rules, go into effect. So I guess I'm curious, David, if on your side, if you've started to see any of that activity start to pick up. We tend to start to see things pick up, but just curious what you've been seeing on the ground so far.
Yeah, I would say it's been a really strong year. Crypto's been up. We have increasing interest both from charities and donors. We also are excited by I would say the strategic way in which donors are giving, in especially thinking about larger gifts, but using, whenever you have a large gift, let's say someone's going to give $1 million. It's amazing to drop $1 million on, say a research hospital or something like that. But you could take that $1 million you plan to give anyway and use it as a match, right, for the end of year. You could particularly say a crypto project or someone in a particular company that wants to do some giving under its brand could do some co-marketing and do something around a project. So we're hearing more and more from folks who are trying to tie in athletic events, their corporate giving programs, end of year matches. And so I would say if someone's looking to give a large amount, reach out to us, reach out to a charity beforehand and just say, how could we use this to maximize, not only give the X amount that I plan to give, but leverage that to, be multiples eventually given by others within the community.
Yeah, and maybe there's a quick follow-up, seeing how the rise in the popularity of DAFs continues on. There's a lot of crypto that's been going into those vehicles as well, and sort of want to at least just quickly stop on that. Maybe some basics into what nonprofits might be seeing, on the DAF side, and then for donors themselves, if they're thinking about strategies, a DAF might be an option as well. So I'd love to get your thoughts around that.
Charitable trusts as well, and put those kind of in the same category. Yep. So yeah, I would say that's somewhat new. DAFs we've heard for the last few years, or not just heard, but we've helped move crypto into DAFs. We have multiple clients who are holding crypto in their DAF. So a DAF, being a donor advised fund, for those who aren't familiar, it's basically a charity vehicle into which you can donate funds in this current year, and then over, say, next year, future years, over time, you can make donations out of that. So all of the tax benefit of giving now, but you can take your time to actually distribute that to charities later on. So we're seeing an increased interest in that. And as I just said, there is an option to not only donate into that with crypto, but you could choose to hold some of your crypto in that DAF. So as hopefully crypto goes up over future years, it would go up within that and increase your ability to give out of that DAF. So then a charitable trust is something we've heard a lot more about this last year, and there's a lot of interest in that. We're in the process of setting up charitable trust accounts for multiple donors and working with different partners on that. The charitable trust is unique in that it allows you to give a lump sum into an account and then receive distributions over time back to yourself as income. So what does that mean? Why would you give and then receive back to yourself? Typically, you're giving to charity and nothing's coming back. So this is a situation where you imagine someone has a large sum of money that they eventually want to give to charity. They would be happy to do it now, but they also want to make sure that they or their spouse have proceeds over time. So let's say someone has $4 million worth, but they want to make sure that they receive back, say 10% of that each year as call it an annuity, right? They could set this up for a 10-year period, 20-year period, or for the remainder of their lifetime. At the end of that period, the end of the term or the end of their life, the remainder of it goes to a charity. So this can also be seeded with crypto, and in some cases, it can even you can even leave crypto in a charitable trust. So this is something where this intersection of both DAF, charitable trust, and crypto is something we're seeing a huge increase in this year.
It's super interesting because I think a lot of folks in crypto maybe are newer to some of the mechanics of traditional finance and some of these products. So when you explain that to me, it sounds very much like large donors who have interacted with the giving block in the past. Maybe they say, hey, I have this lump sum, but I'm also trying to do some forward planning. Like, what can that look like? And I think the conversations, like, they've run the gamut of, oh, maybe I'll stake a bunch of this asset and use that income as some form of charitable, like, giving stream. So what you're saying is effectively your team has been not hand holding, but educating and really working with some of these folks to create that sort of lifetime giving plan. But just with crypto, I would say in the backdrop of it. Is that right?
Yeah. Yeah. So it's one of those things that if you were to talk to an estate planning attorney, they likely would offer this traditionally, but no one had really thought to put crypto as part of that strategy. So it's really just crypto being used in what is already a fairly common estate planning vehicle. But exactly like you say, it's a scenario where someone wants to make sure there's some, trickle or volume of income, if you will, coming back. But they're also interested in giving a large portion of their net worth to charity eventually.
Super interesting. And one, I guess, maybe exotic question for some of our like crypto power users. If I'm reading or hearing what you're saying correctly, like those assets are still allowed to be productive while they're in that vehicle, correct? So I'm not sure if you're having these conversations yet, but we run up against folks who've maybe done very well in a specific coin. Like, are those assets eligible to be, say, put to work in staking or something similar for those folks maybe wanting extra income generation, but also maybe extra appreciation of that total bucket? Is that something we're talking about with folks yet, or is that maybe still a little green?
Yeah, exactly. No, that's what we're doing. That would be a scenario where someone holds crypto, and it is subject to the fiduciary overseeing the trust agreeing that this matches the portfolio risk. Because when you're setting up this charitable trust, you're actually creating an entity. The trust is an entity. Think of it as like a single purpose charity. So that is overseen by different advisors and fiduciaries who say, yes, this is a reasonable use of the funds. You can't go burn it on, gambling on some crazy project, 100% of the funds. But let's say a good portion of it you want to hold in Bitcoin. That just increases ultimately the amount that will go to charity at the end. So if you believe in a project, you believe in even just holding in a range of crypto assets, that's definitely something that's available. It just feels better, like you said, as kind of a crypto native, right? You're thinking, I could give, but then I've got to exit these positions in crypto, and it just philosophically feels better to keep it in that asset.
Yeah, I was going to say, not that we coin a lot of terms on the podcast, but the idea of bullish giving is a pretty cool concept for sure.
Hashtag, yeah, gotta coin that one.
Well, David, any other thing? I want to kind of give you the floor. Anything we've not asked? Anything that people should be aware of? We've talked about things from the individual, kind of like everyday donor, for lack of a better term, told nonprofits what they can expect. Introduce some new giving vehicles across donor advised funds, charitable remainder trusts that they might come across. Maybe even advisors that are having conversations with their clients about, their charitable giving, which now includes crypto, which in other years it may not have, or at least is now getting to a large enough size where it warrants, more of like a thought out strategy. But yeah, would love to kind of give you the floor for anything else that we should be aware of.
Yeah, a few things I would say. Connect with, if you know what charity you want to work with, connect with them early on, whether through the giving block or directly. And again, there are ways in which your support can be leveraged to really multiply your ability to eventually bring others to the charity. And then just reach out to the giving block early, right? Even if you're you're planning to give at the end of December, say, hey, planning to give X amount to this charity, let me know if there's anything I'm missing. We can help you think through, just make sure everything's going to go smoothly. I think sometimes people feel like, you're a technology platform, you probably don't want to spend a whole lot of time responding to emails and responding to messages, but to the contrary, we love to hear from donors early and often, just like we like to hear from charities early and often, and love to do some of that planning ahead with you guys, just to make sure it's that much smoother when we get to the point of actually sending a donation. And then I guess just as a general statement, I'm super excited, pumped about the end of year giving season. Crypto's in a good place. We're hearing a lot of excitement from, again, donors, their advisors, and charities. I think it's going to be a great year. I think we're very fortunate to be in a country where charitable giving is so common and encouraged by the tax law and by the government. So I think I'm just really bullish.
I love it. Well, Pietro, I can't resist maybe kind of like putting you on the spot here for a little bit. You're the market guy. How are things looking as we head into December?
Oh, man. Well, before I give you that commentary, I just want to give David a quick shout out for a lot of the listeners. I know we've had David on the podcast before. It's almost like a recurring annual segment as we go into the end of the year. But a lot of the updates that we are so fortunate to bring to you in terms of a lot of the large gifts and a lot of the large, I would say, like needle moving opportunities for the giving block have been spearheaded by David. So when we talk about some of these large institutional gifts, as much as Nick and I might like to take credit for some piece of it, I would say a good portion of the credit does go to David and his team. So agreed with every statement you just made. We're definitely seeing, I'd say, a real like Rubicon moment for crypto giving over the last year. Obviously, price going up is a huge element of that. But to answer, as we look ahead, I would say, prices are still historically quite high, all considered. Bitcoin north of six figures is always a good day in my book. Folks who maybe have purchased in the last 2 months are not loving that as much because we, have been oscillating between 120,000, 100,000. I would say it's a time to consider the notion that like Bitcoin is having its silent IPO moment, which is something that a few pundits have brought out, which is to say like it's becoming so mainstream that a lot of the supply is now changing hands from folks maybe from the vintage of 2010 or 2011 purchases of Bitcoin to more institutional players who are looking at this as a 10, 15, 20-year asset class for themselves and their clients. Mm-hmm. So my ultimate perspective is that I'm still bullish, but I think a little bit of, reasonable expectation setting is important for everyone. And we're still benefiting, I would say, from, again, that vintage of 2010, 2011 Bitcoin purchasers maybe are thinking about charitable remainder trust or talking to David and his team or their tax advisors and the like to set themselves up for, some sort of financial legacy. So yeah, I'm still very optimistic on the space. I think we have, a bunch of things going on in traditional markets. I don't want to talk about those necessarily because we'd be here all year. But that being said, things are looking very good.
Well, I guess to wrap things up for people who might be listening to this, right? If you're that donor looking to potentially take some profits, consider, supporting a number of great causes that you can certainly find on the giving block or, reaching out to, to those nonprofits that you might have been patronizing in the past. As David mentioned, we are real people sitting here. You can reach out to us anytime. This is what we work, most of the year for. Obviously we're working all throughout the year, but this is like the big show going into this next, month or so. So it's all hands on deck. The team is here. It's something that certainly sets us apart. So if you're a nonprofit with questions, we've got them all. We've got all the answers for you. And, we'd love to, field, any of these questions. If you're, that donor that is trying to figure out what the strategy even looks like, or you're hearing from donors that, some consistent giving and a strategy, is something that's getting a little bit more time and attention. David and his team do a phenomenal job walking through all these considerations. So we'd love to hear from you. The team is here. It's going to be a fantastic giving season. So with that, thanks for joining everybody. We're Going to be really excited to see what takes place over the next month or so. And with that, we'll see you on the next episode. Thanks, everybody.